Hi, so today I'm going to talk about why I think the Dow dropping substantially this week is actually a good thing, or it can be a good thing for investors. So, the number one reason being is for the investors that are holding cash, liquid cash, waiting for something like this correction to happen. Now they can buy and they can get in good prices, bargain prices for a lot of stocks. Um, so that's one reason. The second reason why I think the correction is it was inevitable. Uh, this is because uh, you look at the new highs quite frequently that the Dow and the U.S. stock market has been making the past couple of years, and it's been high after high after high. So what goes up must come down. That's basic law of physics. So with the Dow, if you pull up like a 5-year chart, which I hope to have a camera soon where I can show this. I don't know exactly how to do it off of just my camera on my computer, but anyways, if you look at like a 5-year chart on the Dow, which is one of the largest index, if not the largest uh, in the American stock market. So if you look at it, it's just like a lot of the previous corrections, and it's lost 10% or so of its value, and that's very healthy, I think. Um, what is or can be slightly concerning to some investors right now is that there's been talks of a rate hike sooner rather than later, talking about March. So that's why there's been somewhat of a sell-off. That's like one reason why. There's several, um, but one thing to consider is that the price of bonds right now. So the U.S. Treasury, I believe, wants to have a 3% or higher, and right now it's 2.86% yield. And as the price of bonds go down, the yield goes up. So I always hear sometimes some people say that the price of stocks are correlated with the price of bonds. And then other people say the price of stocks are actually inversely correlated with the price of bonds. And you can actually look at this two ways. You can look at it as when the price of bonds go down, the price of stocks go down. So they're correlated in that regard. But when the price of bonds go down, the yield goes up. So you can always look at it that way, that the price of stocks and the price of bonds are inversely correlated. Um, this is something to consider, obviously, as an investor. It comes down to your personal investment plans and your goals. Uh, but as more of a trader, uh, this is a correction that could possibly turn into something greater, or it could just be um, just a normal correction. So if you look at corrections in the U.S. stock market, less than 1 in 5 turn out to be something greater. And this is just my prediction. I believe, and we'll see if I'm right about this, that this right now, the market's trading really volatile. There has not been any fundamental news released yet. So I think to an extent right now what's happening on February 8th is just um, healthy profit taking, and it's going to open up prices for people to get in. And I believe closer to the end of the year, start of 2019, that's where there may be like a stock market crash. This is just like, I feel, giving a taster of what's going to happen. But I hope I'm right about that, because right now I do have a lot of my money in stocks, so we'll see how things play out. But it's going to open up some excellent buying opportunities because the market, if you look at almost any, or all the large index funds rather, if you look at all the returns over the 30 years or 20 years, it's just an absolutely beautiful chart uptrend. And you're going to have stock market corrections, and that's just part of the stock market is the corrections, the losses, but they're only losses when you sell. So that's another thing too is this is where I encourage everyone to stay liquid. So to have maybe 30, 40, or 50% of your total equity in cash. So when something like this happens, you can average down, you can get into better prices, or you can ride the wave with the traders and short the market, or short stocks, or you can buy puts, sell write call options, whatever you want to do to ride out that down wave. But I feel it is definitely a possibility that the Dow will hit around that 19 or $20,000 mark if we see a sell off on tomorrow, which is February 9th, for like another 1,000 points or greater. Uh, it could definitely snowball. And right now, just with the whole buying and selling that's going on right now in the market, it's starting to tip over to the bears, and we'll see where it goes. Um, that's that's the fun, I guess, and playing the stock market is that you get to ride these waves and make investment decisions that best benefit yourself. Um, so thanks for watching, everyone. I'm going to leave some links in the description of computers that I recommend, or just some simple reading material that I found to be very useful in learning about equities and stocks and trading. Uh, Hope you enjoyed.